Sure. So, first of all, I know we talk about this a fair amount, but for maybe anybody who doesn't know, the funding rate is based on premium, when the premium is the difference between the perpetual contract price and the weighted spot index price. And so it's essentially a mechanism that incentivizes market participants to keep the perp contract pegged to the weighted spot index price by paying out a funding rate for taking the other side of the trade. So when funding is positive, longs are paying shorts, and when funding is negative, shorts are paying longs. So funding is really useful in two ways, in my opinion. So A, when price is diverging from funding. So that just means when, for example, price is dropping and funding is rising, or, price is rising, funding's dropping. And B is when there's a regime, meaning kind of an extended period of time when funding is either rising, or positive, negative, or mixed. And that also needs to be paired with high open interest that hasn't been flushed yet. The reasoning I tag on that extra point, it's really crucial to understand, because if there's no open interest, who cares about the funding? Because open interest doesn't have a major impact on the market right now. So, for example, funding is less important right now than it was, call it a month or so ago, just because OI got wiped out pretty heavily. I mean, it's still important, but it's not, as important. And then so two examples of A. So I said A was when price is diverging from funding. B is when there's a regime. So two examples of A were, first of all, when we squeezed off the summer lows, price was moving up, funding was dropping, especially on Bybit. And then also another example would be after the all-time high breakout last month, when price started grinding down and funding was mooning. So you had that dislocation there. And then this most recent flush was more of an example of B. So meaning, we had a prolonged kind of regime of positive funding paired with all we talked about the long short ratio, as well as we were at all-time highs in both BTC and USD terms, nearly on the perpetual open interest, as well as open interest excluding CME. And so going off of this kind of idea of regimes, we talked about, well, actually I was on the show last week. Last week in the newsletter, I showed like this kind of zoomed out view of all fundings of history since like March 2020. And so to just kind of walk through this briefly, I won't like get into it too much, but so after the March liquidation cascade, we were in a regime of negative funding, and price was grinding up, meaning traders were essentially in disbelief, which is what you really want to see if you're a bull. Heading into kind of the September area. Once we if you look at the chart, in September of last year, we kind of had this plateau up on the price action. So we went up, kind of plateaued out, and then we had this 20% move down. On that initial move up, when we were plateauing, funding was mooning. And it was like the highest it had been all year, meaning that, perp traders were saying, oh, we're going straight to all time. We're going straight to 20K. This is it. Right. And so then they inevitably kind of got flushed out. And so we went from a regime of positive funding, then that got flushed out. And then after September, after that 25% correction in September of last year, we were in a mixed regime, meaning that we had both negative and positive and majority negative. And that's what you really want to see if you're a bull, as well as, what you really, really want to see is just straight negative. But, generally, like if you're in the Bitcoin market, you're by definition, bullish on the asset. So generally, you're going to see mixed funding at a minimum. But that's really showing you uncertainty. Mixed funding is showing you kind of uncertainty from perp traders, or kind of lack of full, just kind of like bullish outlook, right? Versus seeing funding really high. So mixed funding is saying oh, we're kind of unsure, right? We don't know anymore after that September flush. Oh, we don't know anymore if we're going to go straight to all-time highs. And that really kind of put us in a favorable spot for this disbelief rally that we had into October of last year, led us into that all-time high breakout. And so what you want to see now that we just talked about, over the last month and a half, we've been in a regime of just straight up positive funding with no reset. We finally got that reset. And what that means is that initially when we had this liquidation move, that the perp, by definition, the perp price is going to be below the spot price, just because you have forced selling. So you're always going to see negative funding on some kind of liquidation move, just because by definition, perp traders are becoming forced sellers during that cascade. The perp price is getting driven below the spot price. But where you're really kind of going to get this gauge is kind of in the day or two, or week or two after. And so in the 2 days following that event, we were straight negative. And then since then, we've seen it go negative again briefly, and we're still kind of just flat. And so what I'm trying to get at here, I know I'm kind of rambling here, but what you want to see, kind of the TLDR, is that you want to see Bitcoin consolidate and carve out a regime of mixed to negative funding, similar to what we had at the end of September. So what I'm saying is that you want to see these perp traders essentially unsure or ideally in disbelief of, some kind of move that we would potentially have to the upside eventually. I'm not saying that, this will happen for exactly this amount of period of time. I'm just saying this is what would put us in a favorable position for more upside. If you're a bull, you want to see this kind of mixed regime of funding moving forward, along with some consolidation.